Hey, this is Jeffrey with another edition of Stock Smart, the March 18, 2021 edition. Hope you're doing well. Update on the Fed. Fed says no rate hikes until 2024 from Chairman Jay Powell. The bond market doesn't agree as the net selling continues and the 10-year note up about 8 to 9 basis points today to 1.74, which is a 13-month high. So guess what? March Madness is here. Starts today. Started yesterday actually playing games. Today it gets going. And I'm going to give you my Final Four because we did talk about this early in the week. My Final Four is Virginia, Michigan, Ohio State, Illinois. And I'm a homer. That's my home state. And Illinois being my final pick. So let's look at the president's picks because this just came in. Barack Obama posted his picks. And he's picking in his Final Four Gonzaga, Michigan, Baylor, and Illinois. With Gonzaga and Illinois meeting in the final. With Gonzaga winning. Barack, come on, you lived in Illinois. What's going on? Anyway, he picked Gonzaga for his champs. Very good team, Gonzaga. I'm going to talk a little bit about another sports story that I read. This is a big area of my life. It was for many years. I had the fantasy sports business for several years, which was wildly successful. I had no clue when I was in my young 20s. I started this thing just because it was fun, and it turned into a great business for me. Way for me to stay home and work and then be there with my kids when they were growing up. There was a story from this guy, Michael Brockers, and I have to tell you, Michael Brockers doesn't know squat. He's a guy, he played with the Rams, and now he just got traded to the Lions. And he made some comments about the Rams' then quarterback who was being traded to the Lions at that point as well, named Jared Goff. And he said about Goff, he said, I just think Stafford is a level up. And he said, in my heart, I deeply just understanding what Stafford brings, it's a level up over Goff. And he says, he added, I feel like watching him over his career, seeing the comebacks, seeing so much of the numbers that he's had, we're just expecting he'll do better when he comes to the Rams. Nonsense. I was in this business for a long time. What you always know, the teams that make the playoffs have quarterbacks that can win games. And in the NFL, you're judged as a quarterback by winning games. I always said that one of the guys who was the most underrated, I mean, he wasn't underrated really, but he was underrated in his accomplishments because he didn't win a Super Bowl. It was Dan Marino. The Dolphins team stunk some of the times, but they always made the playoffs. Against those great Bills teams, they lost first round a lot of times, but they made the playoffs because of Dan Marino. And Jared Goff, by the way, has made the playoffs a bunch of times with the Rams. I think it was second or third year he was in the Super Bowl, and he was way above his game at that point. I mean, you could tell he was lost in that game when they lost the Patriots. And Belichick just made him look silly. But Stafford doesn't win. This guy, Brockers, doesn't know what he's talking about. I can tell you, NFL quarterbacks win games. That's what they're paid to do. Not put up numbers. Stafford puts up great numbers, doesn't win games, hasn't. Being a Packers fan, I used to love it when the Lions would come to town or when the Packers would play the Lions. They dominate them. And Stafford will throw some interception or something. They keep pointing the game. He's not a clutch player. He hasn't been. And you look at that and you look at playoff appearances. That's what quarterbacks should be judged on. So anyway, Brocker, sorry to break this to you, but you don't know what you're talking about. You just don't know what you're talking about. And I tell you, the same crazy things going on in Seattle, where you have the most clutch quarterback that I can't remember a guy as clutch as Russell Wilson, who's won so many games for that team coming back, and they're trying to get rid of Russell Wilson. What is going on in Seattle? That is absolutely nuts. All right, let's get into some stock stuff. Amazon getting into the home mobile healthcare business. So guess what, Teladoc? Be careful here. Because Amazon's coming into town and they're getting ready to take your business away. So Amazon, let's look back. When Amazon got into the pharmacy business, they were going after CVS and Walgreens. Well, CVS stock, which used to be 100 or so, 100 range, it's halved now. It's never recovered. So you get Amazon coming into the mobile healthcare space, going after Teladoc. I don't think that's a great idea to be, in business. I wouldn't be invested in Teladoc now. I'd be freaked out. So Amazon going into this space with all their money, with all their connections, all the products they have, all the ties in the medical industry that they already have that they've been building. They were very active with COVID. Lots of money, billions of dollars they invested trying to get COVID vaccines and COVID testings. And they had a large test site that they put in place. So Amazon very involved in the medical industry. But I would say, stock of Teladoc hit a 52-week high about 308. It's now down to 185. But this Amazon story, getting to mobile healthcare, I don't know. I wouldn't be an investor in Teladoc heading in the future. VIX is up about 4%, 5% today. Volatility, we are overbought on the S&P 500 oscillator, which means that We are going to see a wind down a little bit, and when we get the wind down, it could be a bit safer place to purchase stocks again. So not only are we getting the 10-year note freak out, move out of growth stocks as NASDAQ gets hit again today, but we're also overbought. So let's look at a stock here. Let's do the marketing language. There wasn't a lot of marketing language on this company because if I started reading all the marketing language, it would give away what company it is and what they do. But here's the first line. We are focused on building products that enable people to connect and share through mobile devices, personal computers, and other surfaces. Well, it's the Facebook, which it was originally called, the Facebook. So Facebook, we're looking at Facebook because this is an undervalued stock or a value stock, at least for the Fang stocks. It's a value stock in that group. So let's take a look at the other Fang type stocks and their price to earnings ratio. Facebook 27. That's low. It is low. 27 for this type of company. Low. Amazon, comparatively, 74 price to earnings ratio. Google, 36, was low, was even lower. It's made a nice move in the last 6 months and really was kind of undervalued as well. And it's because of the secretive nature of Google. They don't tell people what products they're working on. It's hard to differentiate the numbers in their balance sheets because they hide a lot of what they're doing and what they're working on. But Google finally made a move and caught up a little bit. Netflix, 86, just completely insane to me when I look at Netflix. For number one reason is that Netflix did grow a lot again. And it was a COVID stock, if you will, a little bit. But Netflix, again, more competition coming into the marketplace. And also subscription businesses, the ones that are entertainment type businesses that people were buying and adding during COVID, they're going to go away because people only have a certain amount of money to spend on entertainment dollars and they're going to have to shave somewhere. I don't know if you'd shave Amazon Prime because there's so many other benefits with the home delivery business. Netflix, you might shave. I'm kind of bored of Netflix. I don't watch it as much as I watch other ones. I have, FuboTV, which I like. I also have Amazon Prime, and I have HBO Max. I don't know if I like Netflix that much. I'm having a harder time than ever, and a lot of this is to do with they haven't been filming many things because of COVID, but it doesn't seem like they have the quality programming or a lot of new programming. Now, I'm sure people will disagree with me if you're watching certain things on there and you really love the programming, great. But at 86 price to earnings, it seems pretty high. Apple, 33p. Was always considered just a hardware company, so it had a lower rating. Finally kind of broke out. It's got a huge differentiation of products. And can you imagine if Apple does get into the EV space, electric vehicle space? Nvidia, 77. Very high. So look at Facebook, little old Facebook with the 27, the Facebook. It's really just a hated stock. People hate it. I don't know if you get like these socially conscious investment advisors who say, well, we can't be in Facebook because they do this and this. They had a big impact on the election. When Trump was elected, there was all that nonsense about Russia, a lot of fake postings. So, Facebook is hated. I'll tell you, this would be my argument. If they called it Instagram, the stock would be more valuable. And that's a company they own along with WhatsApp. They generate cash on cash on cash. It's an advertising business. That's what they do. Hit a 52-week high of about 304. Now sits in the 280s, but is still undervalued. 283 today. Still undervalued. If it had traded in the range with the other price earning ratios as these other companies that are Fang stocks, it'd be 360, 370, 380. Maybe higher. So, here, we're going to still get a little bit of this unrest with the growth stocks and the tech stocks. What I would do is maybe take a small position in Facebook right now. We're about 3-4 weeks away from bank earnings. It's going to set to start mid-April. You're going to get JP Morgan, Goldman Sachs around April 14th. And then you'll start getting people who, they're going to be disappointed with the bank numbers, but they're overdone. I'll tell you, as much money that's gone into the financials because they're considered value stocks, they're overdone. Those numbers are probably going to disappoint because the yields quite aren't there yet because the Fed funds rate hasn't really changed. So the yields in the financials aren't going to be there. They are value stocks though. Their price to book ratios were way. These things were cheap. Goldman Sachs. These companies were very cheap. So there's a reason they moved up the cyclical rotation here. But Facebook is still undervalued. It is a value stock as far as the Fangs go. Its advertising business is the best. I can tell you, this. If you look up something on your Google browser, you search it, and then 5 minutes later you go on Facebook, there's going to be an ad for it. Whatever it is, shoes, hats, cars, it doesn't matter. Facebook will have some retargeting going that's going to hit you smack in the face within a minute of you launching your Facebook. They're great at it. They do it on Instagram, and they do it on Facebook. And this company is just a hated company that's a value stock. And again, if they called it Instagram, I think it would do better. So hey, I got a question from
The
Jane.
average
Hey, thanks for the
investor.
questions. Keep them coming to Jeffrey@jeffreycamus.com. Appreciate the feedback. So Jane says, I'm only 25. I make under $80,000 a year. Can I become a millionaire investing in stocks? Jane, yes, you can. It's pretty easy. It's not even that complicated, really. So for where your wealth is and what you're making salary-wise, you'll probably be in the place where you maybe consider a 401k Roth or a Roth IRA. You know, it depends on the salary limitations. There's a few differentiations in these specific products, but that's a good place to start. And the benefit of the Roth, of course, is that you're taxed now and then not taxed later. So at 25, you have years to go as an investor. Your time horizon, as we call it in the industry, is great. So take advantage of it and get the benefits of compounding your wealth. And I have a perfect example for this. It's really simple. So I would get a Roth IRA or a Roth 401k. Roth 401k will give you a little bit higher limitation. So as you make more money, as you grow in your career, you'll be able to put away more because the limitation's, higher. And you also have matching because it'll be tied to a company potentially. It's just a different requirement. So talk to your advisor about that. Get some more information to see which Roth would be good for you. But the key thing would be is start right now. Let me give you an example. I looked this up. It was on moneyunder30.com site I looked up, and they have a great example that fits you perfectly. So we're going to say Jane saved $1,000 per month from the time she was 25 until she turned 35. So this is just $1,000 per month for 10 years. And then you stopped saving, but left your money in the investment account, right? Which you could do pretty easily. And let's say it accrues at 7%, annually until you retire at 65. You know what you're going to have when you retire at 65? About $1.5 million. And that's you putting in, what'd you put in? You put $1,000 per month for 10 years. So we'll do the quick math on that's $12,000 a year times 10, $120,000. Easy math. So you put $120,000 in, and then when you're 65, you didn't put any more in. You just left it. You probably had an index fund. Maybe you had the SPY, maybe you had the Russell 2000, the IWM, or maybe you had the triple Qs, which are the NASDAQ stocks, the high growth stocks. Maybe you had a combination of all three. You left it in there. You returned about 7%, which is not difficult to do. You returned 7% over a long time period that you left it in untouched. You didn't even build it or add anything into it after 10 years. You have $1.5 million. So yes, you can become a millionaire. Take advantage of it now. Young people out there, do it now. It's a time to invest. Just put a little bit in, put what you can afford. And $1,000 might be a lot when you're 25. Maybe you can start with 500. And maybe you can keep going in your time horizon. You can keep adding to it, and you'll have even more money. The name of this game really is compounding over time, and really ignore it. You don't even want to look at it every day. Just put it out there, put it in a little thing, put it in there, let it grow. Don't be a day trader. Just be an investor, long term. Stock market doesn't fail over 100 years. It just returns anywhere from 7 to 10%. You'd be fine. Jane, thank you for the question. Thank you guys for listening, and we'll see you again next time on Stock Smart.